Lithium Americas stock posted an incredible 95% gain in a single day. If you missed it, don't worry, most people did, unless you're in our membership. And so in this video, we'll show you why we entered this trade early and how you can apply the same approach to catch the next big opportunity before it takes off. For example, this options trade turned $30 into over $200 per contract, a gain of more than 700% profit. That's how the rich keep getting richer and shows exactly why we keep tracking their trades. So, what just sent the stock soaring to a new high with a remarkable 95% gain? Well, let's take a quick look at the news to find out what sparked this incredible move. Now, Lithium Americas is a mining company that produces lithium, a critical component in electric vehicle batteries. And right here, we can see the catalyst, talks of a deal with the US government and General Motors. But keep in mind, this may not be a good deal. There's still plenty of risk in this stock. So that's why we'll also show you how we updated our trade using an option strategy to protect profits and reduce that risk. A smart risk management strategy that can be applied to other trades as well. And speaking of other trades, if you thought this stock's 95% gain was impressive, wait until you see our latest trade in Unicure. That one delivered a massive 247% gain in a single day. And we just posted a video on it. We'll link that up here. Check it out if you want to learn more about how we keep finding these winning trades. It's more proof that our deep stock analysis is not based on random luck. There's a method behind it. Now, let's get back to Lithium Americas, because even though this stock only gained 95%, what we did afterward with our trade is just as important. We adjusted the position into a strategy that was effectively risk-free, setting us up for more potential profits with no additional capital at risk. But to do this, we had to be in this trade early. And that was only possible because on this day, July 16th, we detected an unusual options trade placed by a wealthy investor. After our deep analysis, we entered this trade and we informed our members. That's why our members were also positioned in this trade early, before the news went public and sent the stock soaring 95%. As you can see here, this was the email we sent to members, alerting them of unusual option activity detected on July 16th. And so we analyzed those unusual options being traded in Lithium Americas stock, ticker symbol LAC, and went long bullish when the stock was trading around $3 per share. And now it's trading at $6 per share. So even if you traded the stock instead of options, it's already highly profitable, doubling in value. This is why we track and analyze unusual option activity to follow the data of smart money before the news even breaks. Did someone know something early? Was this US government loan discussion leaked by an insider? We may never know for sure, but here's what we do know. Our data analysis picked up on it early, before this news went public. So if you want to start getting access to the deeper insights that lead to profitable trades, including these email alerts, consider joining the membership on our website. We'll put a link here. Keep in mind that if you join the membership through YouTube instead of through our website, we cannot email you these additional trade alerts because YouTube does not share your email address with us. So if you want more opportunities to profit, make sure to join the membership through our website, where you'll get full access to the trades of wealthy investors and potential insiders so you can see what the smart money is doing before the trade becomes highly profitable. And that's exactly what happened here. That's why we entered this trade, specifically the November 21st options at the 4 strike calls. At the time, this investor bought 6,000 contracts at a price of 30 each. Since options prices are shown here and each option contract controls 100 shares of stock, to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each options contract costs $30. And so let's take a look at our original analysis using the risk profile graph, focusing on these November 21st options at the 4 strike calls, which were priced at $30 per contract when we entered this trade. And so on this graph, our profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Keep in mind, this graph already includes the cost of the trade. That's why you can see in the blue line that if the stock had dropped down, it would have been a negative $30 loss, the entire cost of the trade when we entered. But instead, it went up higher to about here. So we have a profit of $216 per contract. And so to calculate the profit percentage, we take the profit of $216 and divide it by the initial cost of $30 and then multiply by 100 to express it as a percentage. And that gives us a return of 720% profit. In other words, for each options contract we bought for $30, that turned into more than $200 each. So we made over 7 times our original investment on this trade. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. So if you want to get access to more of these deep insights from the rich, then just head over to our website. We'll put a link up here where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all trades by wealthy investors are winners. Some end up as losses. Nobody wins on every trade. That's just the practical reality of trading. But just one of these winning trades like this can offset several losing trades and drive long-term growth, making a significant impact on our overall net profitability. For example, we could lose 7 trades in a row, capped at 100% loss each, and still be up positive by a 20% net gain, thanks to just one winning trade like this. Now, if you've been following our work, you know that we do not lose that many times in a row. In fact, it's usually the opposite because we win a lot more trades. But the point is this: many people pay too much attention to win-loss ratios. What really matters is not how often you win, it's how much you make when you do win. Maximizing gains on winning trades and minimizing losses on losing trades has a far bigger impact on your bottom line than chasing a perfect win rate. That's the edge we focus on. And so to stay consistently profitable over the long run, we use strategies with a better risk to reward ratio to maximize profits and minimize losses. So as a real-time example, let's go over how we updated our trade here into a strategy that gives us more upside potential while managing risk to reduce losses. As we can see here on the option chain, our original trade was for these November 21st options at the 4 strike calls. We still have some positions here marked as POS, and the green color indicates a buy position. And notice how these contracts are now worth between a bid-ask price of $240 to $250, compared to just $30 when we entered this trade. That's why it turned into such a profitable trade now. So we started locking in profits by closing some of these 4 strike call options and rolling into this new position here at higher strike prices, the 7.5 strike calls and the 10 strike calls, which we sold, as shown by the red color of our new position. And notice how the open interest shows 0 contracts open, meaning the volume spikes in these two options are from new opening trades. So basically, we closed out of some of these contracts by selling them, locking in profits, and rolled into this new position by using the profits from our original trade to buy these 7.5 strike calls and to sell these 10 strike calls, setting up a vertical call spread option strategy. In other words, a new trade that costs less than the amount we sold our original trade for at the 4 strike calls. That means we entered this new trade at a credit, not a debit, reducing our risk by using only the gains from our earlier trade. And so when we analyze our trade now, you can see here on the risk profile graph, the buy position cancels out the sell position because they are the same November 21st options at the 4 strike calls. So we are just left with the vertical call spread at the 7.5 and 10 strike calls that expire November 21st. And so on the graph, we can see that if Lithium Americas stock drops from where it is now or even crashes, our trade would not have any negative loss. It will always stay positive because we've locked in more profits than the cost of our new trade. This is how we manage risk, by minimizing losses, and in this case, we completely eliminated any possible loss while still staying in the trade to gain more profits if the stock moves higher. But remember, this was only possible because we followed that wealthy investor early, back on this day, before the news went public, which drove the stock up to a new high with a remarkable 95% gain. So if you want to get access to our strategies backed by our deep analysis and trade alerts, just like this one, when a well-informed investor positioned early with this trade, then sign up on our website. We'll link that here. Because the next time a wealthy investor makes an unusual trade, you'll want to be in early, not chasing after it's already gone up. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.